What's up guys, 1% Trading here. Today I just wanted to quickly go over pips. So you probably already know what pip is. So I'm going to go straight into why pips don't matter. So most traders that you see in the internet are always talking about how many pips they made in a certain week or month or even year. And well, unfortunately or luckily, this has absolutely nothing to do with their results because pips don't actually represent anything. If you made, I don't know, 500 pips, that does not mean anything. That could mean that you are either extremely good trader or that could mean that you lost a lot of money. Let me explain. So what we're going to look at first is a trade example. Let's say that we are going to take two trades and I prepared a little bit of an example. So let's say that our first trade has a risk to reward of 1 to 2. That means that our stop loss, for example, this is swing trade or almost an investment trade, that our stop loss is 200 pips, and because our risk to reward is 1 to 2, our take profit is twice as our stop loss. That means 400 pips, and our first trade is a loss, unfortunately. So we take another trade. Our second trade is a win, and our win had a risk to reward of 1 to 5. And this time we took a little bit more of a short-term trade because our stop loss was only 10 pips and our take profit was 50 pips. So where does that leave us? So our win ratio was 50%, obviously. Our first trade lost, our second trade won, but what does that actually even mean? So the end results, if we first take a look at the pips, our first trade lost 200 pips, right? So minus 200, and our second trade, won, which means we got 50 pips. Minus 200 plus 50 equals minus 150. So we lost 150 pips. But does that mean that we are actually in drawdown? No, not in this case. Our actual profit is actually a 4% return. Our first trade lost 1% and our second trade won 5%. 5 minus 1 equals 4. If we risked 100 euro or dollars or whatever per each trade, that would mean that we have 400 euros profit. If we risked, I don't know, 1000, we would get 4000 euro return. So as you can see, we lost 150 pips, which is by most standards a lot, and yet we are in huge profits. So I hope that this clears things up and that you will never again look at pips as a measure of results. If we quickly just look at the charts, just so you can get a visual representation. For example, two trades, both are long trades. I just plotted this risk to reward tools quickly to the chart. nothing special. I didn't complicate where I put them, just so I can make this point. So the first trade is around 3%. Let's make this 3 risk reward 1 to 3, and the second one is 1 to 6. And now just look at the pips. The second trade is actually, in terms of pips, is 2 times smaller, right? Basically, almost. And as you can see, the result was not the same at all. In the first trade you would get only 3%, while in the second one you would get 6%, which is considerably more than in the first trade, and at the same time you would not catch as many pips, right? So I hope that makes sense. So the goal is to make as many percent as possible and not care about pips at all, because they don't tell you anything. I hope that makes sense, and see you in the next video.